In terms of vols, realized vols staying pretty elevated. Obviously, some big swings we had. You can see here on these charts, the implied bands getting smashed through quite regularly on the downside here, and even on the bounces, getting pretty close to touching them. So Bitcoin breaching that 3 times last week. ETH breaching it also, but really overshooting pretty dramatically down here, right? So some really wild swings. Those realized vols, we're looking at about 95 on ETH, and about 60 on Bitcoin. It puts the carry very negative, looking at like minus 10 vols on Bitcoin and looking at like minus 30 vols on ETH. So really, really deep negative carry as those implied vols have stayed somewhat in check whilst realized vol has exploded. That pullback into 92K to me looks like it squashed the chances of another all-time high by year end. That would be punchy to reverse and get up to 110K from here by year end in a week. I highly doubt it. So, I think you're probably looking at 100K best case really for year end. That's certainly what it feels like from here. You can see here in terms of the term structures, we've got this about a 3 vol point collapse in the short end of Bitcoin. Back end's pretty stable though, out to September next year. And then in the front end, ETH up a couple of points. And then generally up in most of the curve. Only really the March area finding a little bit of pressure there, but nothing major, right? Tiny, but unchanged relative to the rest of the curve. There's been quite a lot of activity in March in ETH, a lot of call spread buying. But I'll show you the flows in a bit. But the fresh money has been coming in Jan call spreads, things like that, outright calls in Jan. That's provided a bit of a bid for ETH there. Looking at the time series once again on the 7-day stuff, you can see we did get the usual seasonal weakness into the weekend. But, it's quite volatile. That front end obviously does react to what spot is doing as well. But in general, you do tend to see a bit of weakness in that front end stuff into Friday. Again, it bounces out of the weekend like it has done again. And then it finds pressure as the week goes on, basically. Now, we have obviously got a massive expiry coming up this Friday. So there may be some unwinds of trades and like cleaning up of strikes going on that pushes the vol around. So I'd expect the vol to be quite choppy as people kind of need to do what they got to do ahead of this really large expiry. I think it's like 50% of the entire open interest is expiring this Friday. So that's pretty huge, right? We're talking around the $20 billion mark on just Deribit alone. Okay, actually skew wise, again, you can see on skew, we did get to a minus 6 vols in the front end there, which is, a heavy put skew, has reverted back close to flat though. ETH got down to similar minus 6, but is holding a little bit of a put premium because the downside has been a bit more dramatic there. You can see it on these skew term structures as well. Bitcoin front end collapsing to 0, back end though still holding for calls out to about 5 or 6 vols there. ETH, same sort of story, although it's gone negative in the front end. And then as we go out, it is back to about 5 vols. Okay, so term structure is very much in contango again. Some put demand coming back for the front end, as we often see in pullbacks. Long dated calls holding about 5 vol premium in that back end, especially after inauguration date. That's where there seems to be a bit more optimism. I think long dated skew though is unlikely to explode much for calls, especially in Ethereum, because a lot of the bullish structures have been done in call spreads in March. So even if we rally, because the dealers are short calls but then long calls behind them, I don't think on a big rip higher in ETH you're going to see a massive bid for that kind of medium term upside because of that call spread structure that the dealers have on, right? Relative value wise, I mean, it's really crazy inverted on ETH here, up to 20 vol points, because the ETH Bitcoin spot spread is winging around like crazy. ETH giving up those gains really quickly, faster than Bitcoin did. Realized vol spreads at 35 vols right now. Therefore, the front end implied spread at 20 looks actually about right. The back end's down to about 12 though. This is something I've been mentioning for a while. We were like, yeah, ETH is back with its high beta nature. So that vol spread, is clearly an own at 5. It's probably an own at 10. It may even go higher. And it obviously has gone higher to 20 vols. Would I buy it at 20 vols? Probably not. We may get some excitement out of Bitcoin early next year, and it might start outperforming vol-wise again. So I probably wouldn't own it at 20 vols, but at 10 vols in the medium term, it is probably still value, right? In terms of relative skewed structure, you can see here we're at -2, which is essentially saying that the front end people are more wanting to pay up for puts on ETH rather than calls. But then as we go longer dated, you can see we flip into calls of about 2 vols if we go kind of out to March, June, sort of April kind of area there. Okay, so pretty similar story to what we've seen in the relative value for a while.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.